Hey everyone, Zach Perry here. Welcome back to the channel. We've got some breaking news. Many of you watching this will probably be watching it the same day or maybe a couple days after I film this, because after that it will probably be not relevant anymore. We'll see. But a lot of people are wondering about this GameStop thing, because they've been in the news a lot, and it's probably not news GameStop loves about how overvalued their stock is. But I wanted to explain to those of you who may not fully understand what's going on and what the implications of that are. We probably don't understand the full implications yet, but I want to give you my analysis on what I think some of them are. But to understand what's happening with GameStop, you have to understand a little bit about stocks and how they work and what short selling is. So first thing, stocks. Normally, when you buy a stock, you buy it and it should reflect, it's supposed to reflect the value of the company, right? So if the company grows and they enter new markets and they're more profitable, their stock price should go up. And that's the way the stock market is supposed to work. So when a company has their initial public offering, there's kind of this guess as to what the stock's going to be worth. We find out what it's worth, and then over time it goes down or it goes up depending on market forces. For example, when you have a hurricane in Florida that destroys orange crops, the price of oranges goes up. And so stock in orange companies could go up as well, because demand goes up and the profit goes up. Or the reverse could happen and it could wipe them out. And so there are all sorts of reasons. Some of them we understand, some of them we think we do, but we really don't, and many of them that we really don't understand that affect stocks. Now, the, I guess, more typical approach, and the one that makes more sense and is easier to explain, is the long game, where you buy an Amazon stock, you buy $100 worth of Amazon stock, maybe a share, and then you wait. And then hopefully that stock goes up because the economy grows, and at some point you can sell at a profit, and you are happy and Amazon is happy. Short selling is a little bit different. Short selling occurs when you're betting against a stock. So when you think this stock is probably going to go down and I want to take advantage of the downturn. So with short selling, with long term, the idea is to buy low and sell high. With short term, with short selling, the idea is to sell high and then buy low. And you're selling a stock first, which is counterintuitive because you don't actually own it, but you're selling a stock high and then you're purchasing it low and keeping the difference, okay? Now, how is this possible? Well, when you short sell, you are actually selling stock you don't own. If you owned it, you'd take a loss when it went down. So what you're doing is you're actually borrowing stock. Let's say stock's worth $100. You're borrowing $100. You want stock, or you get one stock, it's $100. You borrow this. So you pay the $100 and you set it aside and you borrow it. And then you wait. The stock price goes down, and then you purchase the stock at $30 with the $100 in that account. And so you keep the difference, right? So if it goes from $100 to $30, you keep the $70 difference less the financing cost to borrow it. And what's interesting about short selling is your broker, the one that you arrange this with, you say, hey, I want to short sell a stock, so they borrow from someone who owns the stock, and then that stock goes down and you purchase it at that position and then you stick it back. The person who actually owns the stock probably doesn't even know their stock has been borrowed. And then it's the broker that charged the financing cost. So it's kind of this interesting thing, but basically you're selling the stock high and buying it low. So what happened with GameStop is this, and this is crazy because what large hedge funds, they've got these computer softwares that measure it and know the right time to sell, and you don't have someone human in there looking and then pushing the button right at the right time. You've got these computer programs with complicated algorithms, but they're pouring billions of dollars into short selling. And so they are predicting which companies are dwindling, which ones are going out of business, which ones are, aren't going to do so well because of upcoming market forces that they think they can predict and often do. And they're going to buy these stocks they think are to decline in price. Now, GameStop is one of them. GameStop and AMC is another. We'll focus on GameStop, but they both their stock prices have been dwindling consistently, in large part due to COVID, in large part due to the changing environment in gaming and movies, you're doing a lot more streaming at home and buying directly on your Xbox console as opposed to going down and getting the physical game, etc. So there are a variety of reasons these stocks have done poorly. Well, hedge fund managers are buying billions of dollars of this stock, borrowing it, right, and short selling it. And then when it drops, they cover their purchase. It's called cover. And then they make that difference, and they're making a ton of money. And it's at the expense of the person who actually owns the stock, so the individual. So the tables have turned somewhat. So what happened with GameStop is these hedge fund people were gambling. They were betting on GameStop stock going down. Well, a couple things happened that made some of the users want to support GameStop and buy more GameStop stock. Now, Ryan Cohen, he was the owner, I believe the owner of Chewy, which was a pet food company, and he had done really well there. Well, he took some interest in GameStop, and he became the largest private owner of stock. He bought a whole bunch of stock of GameStop, enough that he became one of the members of the board of directors. And a lot of people were confident that that was going to turn things around. And so there was this huge subreddit channel of a whole bunch of users on this forum who were like, hey, let's all go buy GameStop stock. And so a whole bunch of people bought GameStop stock. Well, when a whole bunch of people buy stock, the stock price goes up, right? There's demand, and this demand fuels an increase in the price of the stock. It does not mean GameStop is selling more games, or GameStop is doing better, or their company is actually worth more. It's an inflated value. And so we know at some point it's going to go down. We don't know how much, and we don't even know how high it's going to go. But when when we're talking hundreds of thousands, maybe millions of users are purchasing GameStop stock, that stock price goes way up. Well, what happens to the hedge fund people who invested billions of dollars betting that it will go down? When it goes up, every dollar that it goes up is a dollar they lose. And their potential for loss is infinite. Because unlike if you buy $100 worth of stock and you're in it for the long game, the most you can lose is $100. If that company goes bankrupt and their stock is worth zero, you've lost $100, the value that you put in. But if you're short selling, the more the stock goes up, and there's no limit, there's no ceiling. It can go up as high as the market forces demand. Those are your losses. And so it's a risky endeavor, short selling. And so all these hedge fund managers, let's say they put $1 billion in, and now they're going to have to repurchase the stock at $5 billion. They've lost $4 billion. And so they're freaking out. And so this story really gets interesting when we've got these deep-pocketed organizations like the hedge funds, and we've got the individuals who are on a forum, and each of these may only have $25, $50 worth of stock, but there are millions of them. And so combined, they can take on these huge hedge fund managers. And so there was this rallying cry. And so they're purchasing the stock. The stock's going up. The hedge fund managers, in turn, are forced to start purchasing their stock. Their call becomes due, or they want to mitigate their losses. And so their purchase creates this cycle that makes the stock go up even more in what is called a short squeeze, which is not unprecedented, but one of this level certainly is, where the stock is shooting up, up, up. And so these hedge fund managers are now thinking, oh, wow, their losses just continually to compound because they have to rebuy that stock at whatever price it is, and they wanted to rebuy it low, keep the difference. Now they're having to come up with funds out of pocket and losing money. So what happened is the hedge funds managers tried to intimidate the Reddit users, and they're tweeting and they're making announcements, oh, these stocks are going to plummet if you're smart. We're hedge fund managers. We know the game. If you're smart, you're going to sell before you lose all your money. And so they're trying to scare people into selling. And then on the other hand, you've got the Reddit users who are combining and trying to, rally cry saying, no, hold to the line, keep your stocks. As long as we keep it going, the stocks will stay up, or they'll continue to rise if more people buy, and will be the benefactors at the expense of the hedge fund managers and hedge fund companies. So it's turned it on its tail. Now, when I heard this, it reminded me of the prisoner's dilemma. I have a psych degree, and you see the prisoner's dilemma. It's kind of this thought experiment, but you see it play out on at least one episode of every single procedural crime drama that ever existed. And the prisoner's dilemma is this, where you have two co-conspirators who have been arrested for some crime, and then put in different rooms. And then the cops they're going back and forth to the rooms, and they basically make the deal, the offer. They say the first one of you to talk gets a deal, and then the other one we're going to throw the book at. And so they try and pressure each other, use the prisoners against each other. Now, the best case scenario for the prisoners is neither one of them talks. If neither one of them talks and there's no other evidence, they both walk. But if one of them talks, that guy could get a very lenient sentence, and then the other guy, he'll be in prison for a lot of years. So if they can both hold to the line, so to speak, that's the best possible scenario for them. But usually one of them will talk because they're afraid the other guy is going to betray him, especially because the cop is convincing him. So this is kind of the scenario that plays out. The hedge fund is the cop, and they're trying to convince as many people as they can, hey, you guys need to sell now, because if there's a sell and the price plummets, you all lose. And so you don't want to be the one holding on. You don't want to be the one without a chair when the music stops. So get out now while you're ahead. And so the Reddit users are trying to, rally themselves. Now they have the advantage the prisoners don't, in that they can communicate with each other, and they can say, no one sell, no one sell. As long as we hold the line, we'll win. And so what does Reddit do in response? And this is crazy, and I don't know why this would happen, but this subreddit was shut down. So they lost their forum. Interesting to see what will happen there. It's not like there aren't other places they can communicate, and of course this is all over the news. And then it spurred a rash of pretty clever memes. And then, so you've got Reddit, which, you can put in, that's like representative of the small man, you think, but they shut that down. I don't know why. And then to add insult to injury, or maybe better phrase, to add more injury to injury, Robinhood, which is a very popular trading account for the small guy, also for the large guy. In fact, I read that one of the hedge funds that is most heavily invested in GameStop is responsible for something like 40% of the trades on Robinhood. So they're Robinhood's biggest customer by far, and they could lose a lot of money. It looks like they're going to lose a lot of money. Well, Robinhood, also known for democratizing trading, making it available to everyone. Anyone can go get a Robinhood account. You don't have to understand stocks. You don't have to have a lot of money. And they've eliminated almost all trading costs. So there's very little cost to do this. And they shut down purchases for GameStop, among others. And so you couldn't buy new positions with GameStop. And so you've got the hedge fund managers, you've got Reddit, and you've got Robinhood. They all seem to be combining against the little guy. And so the little guy, and it's crazy how much power the little guy has found here, and they're honestly costing billions of dollars to these people. So there's these thoughts and ideas that because one of Robinhood's biggest customers looked to lose billions of dollars, Robinhood went to bat to protect them at the expense of its other users, which is a conflict of interest. Well, this spurred not one, but two class action lawsuits, one in New York and one in Illinois. Both of them happened yesterday, January 28th. There may be more, where they're alleging breach of contract, that Robinhood should not be shutting down public trade platforms, and there may be a conflict of interest or a breach of implied covenant of good faith and fair dealing. So we still don't know what's going to happen. We don't know how high the GameStop stock is going to go. It went up to almost 500 when its bottom price was $2 and something. So it went 190 times its bottom value in this short squeeze, which is the highest and quickest we've ever seen. And even lawmakers have gotten involved, wondering, why is Robinhood shutting this down? On both sides of the aisle, they've said, this isn't right, we're going to investigate this. And then in a classic man versus the man scenario, hundreds of thousands of Reddit users took to the App Store on Google Play and the Apple App Store, the Mac App Store, to give Robinhood a 1-star rating to bring their ratings down. No, I checked yesterday. They've got 2.4 million ratings. They still have a high rating, but I thought it was hilarious that a whole bunch of these people went in and in a combined effort to bring it down. I did read a story that said it brought it down. I don't know if Apple kind of put the kibosh on that or not, but basically we've got a power dynamic shift here. And the implications of this are yet unknown. But what we see is hedge fund managers no longer hold all the chips. All it takes is a forum with which like-minded people can communicate, and they can now take on the hedge fund managers. Now, One thing I haven't talked about is sometimes when you get these huge purchases and these huge short sales, it's a self-fulfilling prophecy. It can actually determine the outcome. You can have one guy like Warren Buffett who goes and buys a whole bunch of stock, and then that stock goes up because he bought it, and then he can sell it and he can make money because he purchased it. And so the hedge fund managers used to have all the leverage there. That is no longer the case. There will likely be legislation in response to this. There is certainly worry that if enough subreddits pop up or other forums pop up where normal people can start doing this, hedge fund managers are losing their edge. It's going to be less profitable for them. We'll see how that turns out. But I really wanted you to, there's a lot of headlines out there, but they don't really explain the brass tacks of what's going on. Hopefully this was helpful to you. And maybe you're even one of those users who looks to make a little money from GameStop. If so, good for you. If you have questions about how the stock market works or how to invest in the stock market tax-free, make sure you reach out to us. We pride ourselves in being friendly. In fact, we make you a guarantee. You can hear I should have turned my volume off. We've got emails that just coming in one after another. But we guarantee you when you call us, whoever answers the phone will make you smile. If they don't make you smile, then you ask to talk to me and you let me know, because we take smiling pretty seriously around here.